What's my housing market 2021 forecast, and will there be a housing crash? Well, today we're going to talk about that. Right after the COVID shock back in April, I said this: seriously, this is the best time in the history of the world to buy real estate, and here's why. Then in July, Corelogic said this:
U.S. home prices to drop 6.6% by May 2021.
So we just had the craziest summer and fall market ever, as people decided that wherever they were locked down was not where they wanted to be long term. 13 million people have gone back to work, 11 million are still unemployed, COVID is in its second or third round depending on where you live, and lockdowns are a thing again. But at least now we have vaccines, so we'll see how that goes. But before we get into it, be sure to stick around to the end of the video, especially if you're an anxious buyer, because I'm doing some research that you may want to participate in. So here we are at the end of 2020. In the last few months, Corelogic has dialed back that home price drop prediction for 2021 that I mentioned a while ago. In their 3-year outlook released earlier this month, they're expecting mortgages to stay low in the 3 to 3.2% range. They see millennials adding substantial demand for homes, and they anticipate home prices rising in most metros with a modest chance of decline in some areas. Now, down in the comments, I know you're gonna say, what about the delinquencies, the foreclosures, the bankruptcies, the unemployment, the landlords that can't pay? All good points, and we'll get to those, but first, let's take a look at what the active market is doing courtesy of Altos Research. Mike Simonson did a fantastic presentation earlier this month, sharing the latest data going into 2021, which I'll put a link to below. But here are the highlights. The median price of a single-family home nationally was up to $347,000 as of December 9th, 10% above what we saw last year, and that number went up to $349,000 by December 28th. But we've seen some softening around the holidays, which is totally normal for this time of year, and closings are taking longer, 40 to 50 days. The inventory of homes for sale in December was 41% lower than last year. So supply remains tight with only 2.3 months of inventory according to NAR. Altos notes that only 26% of sellers took price reductions this year compared to the normal 35%, which is another indicator of strong pricing ahead. A trend in motion tends to stay in motion, and housing has a lot of momentum right now. Millennials are reaching their peak purchasing years and will be buying for the next decade, especially as long as interest rates remain low, where they are projected to remain for the foreseeable future because the U.S. can't afford to service its own debt if rates go too high, so we're kind of stuck. Yes, boomers are reaching that age where they start to downsize, but that cohort is smaller than buyers coming in. The reality is, we're still in a record hot market despite seasonal fluctuations. The housing market was strong coming into February 2020 of this year, and COVID dealt it a big blow. But in the end, demographics and lack of supply are winning out. So, we're heading into 2021 in a very strong seller's market. But what about all the bad stuff? Evictions, delinquencies, foreclosures, unemployment, and bankruptcies. Okay, evictions. The U.S. Census Bureau estimates that 6.7 million Americans are at risk of eviction in the next couple of months. However, that was before the eviction moratorium was extended to January 31st. I expect this will be extended again because what administration wants to be responsible for throwing families out onto the street in the middle of a snowy winter? This is not good news for landlords, though, who have already filed over 162,000 eviction notices since the pandemic began. Frankly, I'm surprised that number isn't higher, given the 44 million rental units currently occupied, which means only 0.37% are being evicted. That's 1/3%. That's low. 12 million Americans are at least $5,850 behind in rent and utilities, according to Moody's Analytics, representing 27% of the occupied rental stock. But if you're a landlord with a federally backed loan, which the Urban Institute estimates that 28% of them are, you can get forbearance, and many of them probably have. 2.7 million or 5.49% of home loans are currently in forbearance, with 19% in the initial stage and 79% in an extension. The remaining 2% are forbearance re-entries. Keep in mind, homeowner equity is generally high right now, which is way different than what was happening in 2008. So as they come out of these programs, if they can't negotiate a new payment program with their bank, they'll likely sell to recapture equity. And frankly, if even half these properties came on the market, it would be a huge relief given the shortage of inventory we're currently seeing. A scenario like that might balance the market and slow price appreciation, but I doubt that many will come up for sale, and here's why. According to the Mortgage Bankers Association, of the cumulative forbearance exits for the period of June 1 through December 13th of 2020, only 7.3% exited by selling or refinancing their home. 7.3% of 2.7 million loans in forbearance is only 197,100 homes, some of which would be refinanced, in a market where typically 5 to 6 million homes sell in a year. So basically, a splash in the bucket. This is not going to crash the housing market. Delinquencies. More than 7.7% of mortgages on 1 to 4 unit residences are delinquent as of Q3 2020, with 5.2% of those in a major state of delinquency, which means they're behind 90 or more days on their payments. However, these numbers include mortgages in forbearance programs. So the rate of non-sanctioned delinquency is closer to 2.8%, but it is climbing according to Fred, so it is a trend to watch. Foreclosures. 1 in every 13,482 properties in the US is in some state of foreclosure, which is like 0.0074%, which is really low. Hardly a crisis. Unemployment. Official unemployment is down to 6.7%, which is just above the 6% that historically was considered normal. However, Shadow Stats puts it at 26.3%, which is probably closer to reality and more of a problem. This alternate rate reflects current unemployment reporting methodology adjusted for long-term discouraged workers who were defined out of official existence in 1994, to make the numbers look better. Bankruptcies. Bankruptcies due to COVID are something I've seen a lot of speculation about. And we've all seen favorite neighborhood businesses shut down. But according to a recent Harvard study, filings were actually down 27% from what they were in 2019, which is not something I expected to find. I can only speculate that maybe because courts aren't fully operating due to COVID, or people are getting help from the CARES Act, maybe cutting deals with their landlords to try and get by, or maybe high filing fees are causing them to procrastinate. Whatever the reason, they're just not filing for bankruptcy right now. I would imagine this will pick up next year, but we'll have to wait and see. So that's the bad stuff. Let's talk about some other key indicators. Purchase mortgage applications. They've been more up than down this fall, but they have dropped off coming into the holidays, as is the norm. Overall, purchase apps have been robust. But here's a metric to watch. The American Enterprise Institute notes that cash out refinancings are up 43%. So perhaps this is how some are getting by during the pandemic. Definitely something to keep an eye on. Google Trends still shows a large gap between buyer and seller interest, with far more buyer than seller searches, and that is projected to increase. All right, predictions for 2021. This is the good stuff. NAR is forecasting home price appreciation at 5.7%, unit sales up 7%, mortgages in the 3.2 to 3.4% range, and U.S. homeownership at 65.9%. Redfin is forecasting price appreciation to slow to under 5%, unit sales up 10%, mortgages in the 2.7 to 3% range, and U.S. homeownership rates at 69%. And Zillow is forecasting 10% price appreciation, unit sales up 21.9%, mortgage rates a little higher than what we've seen this year, and they didn't even weigh in on U.S. homeownership rates, but if they did, I imagine it would be high because they seem to be high on everything over there. So, Combining all that with Corelogic's 3-year outlook, which estimates price appreciation at 2.1% next year, and given what I'm seeing on the streets around me, I'm thinking, shocker, prices will probably go up for most metros in 2021. I would guess probably with price appreciation in the 6 to 8% range and mortgages around 3%. And this may bleed into 2022 because the housing market is like a freight train. It can't stop suddenly. Once it gets going, the momentum has to play out. Actually, there is one thing that maybe could stop it, and I'll tell you more about that in a minute. So that's the housing market 2021 forecast. What does this mean to you? For those of you who want to buy now for personal pressing reasons, if you have a stable income, a solid financial cushion, and you plan to stay in the house for a whole lot of years, right now in the dead of winter may be your best chance to get a decent deal for the next year and a half. For those of you thinking of selling, everything is going your way right now. But price strategically if you decide to sell in the winter because bad weather may cause buyer traffic to lighten up. And for those of you waiting for a housing market crash, sorry, it's not happening in 2021. Unless this one thing happens. What's the one thing? If the Fed stopped dealing stimulus in all its various forms, historic low interest rates, increased government spending, buying assets to prop up markets and other forms of institutional welfare, if that all came to a halt for whatever reason, then the whole system might start to collapse and house prices along with it. But the odds of that happening are so low right now. Looking at Biden's $6 trillion spending plan for the next year, it's obvious what government has decided. They're gonna spend. Assets created from thin air, courtesy of the Federal Reserve. So go ahead, borrow a bunch of cheap money, buy a house, buy some land, buy a farm, buy gold and silver, and you might as well throw in some Ethereum while you're at it. Any hard asset that you can get your hands on is probably a good idea, as more and more money is magically injected into our unicorn economy. But that's a whole nother rabbit hole. Let me know if you want a video on that one. Now, remember that research project I mentioned in the beginning? If you're thinking about buying or selling real estate, but you don't know when to buy, what to buy, whether or not you should buy, or have anxiety around the decision, then I would love to talk to you. And don't worry, I'm not trying to sell your house or be a realtor. I'm just trying to gather some information from people going through the process so that I can deliver content that better serves you. So if you'd like to chat with me on a free 30-minute call, I'll put a link to my Calendly below and just pick any available time between January 2nd and January 16th that works for you, and I'll go ahead and email you a Zoom link for the call. So, what do you think the housing market's gonna do in 2021? Put your thoughts in the comments below. Don't forget to like and subscribe, and as always, thanks for watching. I'll see you next time. Hair and mouth. Yes, boomers are, oh my God, Ted sneezes so loud. Yes, boomers are reaching that age where they do, oh my God, Ted, really? But what about all the bad stuff that I can't ever remember? I don't know what to say about Zillow. They are high on life. Why can't I say this? Okay, on to the next scene. Hey trolls, how do you like these teeth? Too close to the camera? Now, just, God, why can't I get this right? Okay.